Tryna feed the streets with the music, doing shows now. I'm from out of country, so anywhere it can go down. I give you $5 back, so then we even.
Yo, what up, guys? Welcome to the second Easy Loot Options watch list. We're going to be covering a few plays that we made last week, like that Roku play and a few others. That Roku play went sideways on us. That did not work out well. Hopefully everyone learned from that and we can move on. This week, we're going to still look out for that Boeing setup. We're going to be watching a few other things like Texas Instruments. We played that this morning. We're going to watch MRNA. We're going to watch AZN. And we're also going to be watching Snapchat. So Snapchat, we called that earnings rip this morning. We were looking to get a nice entry over here. We didn't really call out a play because we were waiting to see what happens, but it turned out that it did rip, and it's still ripping quite a bit. 3% isn't shit. We were looking at Twillo earlier this morning too. We were calling 265 calls, I believe, or 260 calls. Yeah, look at this. This is ridiculous. We called these actually, I think we called these before market open. That's just ridiculous. 11%, 10% on the day. So we could have played those. We decided to stick out just in case something crazy happened right here. Honestly, I forgot to check back and we would have caught this breakout, but I missed it. Doesn't matter though. We're going to catch the next one. Yeah, so let's get into last week's plays and we're going to move from there. Alright, so before we cover last week's plays, we're going to cover a quick spreadsheet that I built for you guys. So this spreadsheet is going to be able to help you guys find realistic option plays that are not overpriced, and you make sure with that by seeing your target percent gain. So realistically, this is how it's going to work. So let me show you on Snapchat. We're going to check the pricing on Snapchat. It's going to be $25.27. So you go back to the spreadsheet, you type in on current price $25.27. Then you want to make sure that you're going to get in the money. So instead of doing a strike price right at your target profit, you're going to go $1 below. So if I think Snapchat's going to reach $28 or $27 by the end of August 3rd or August 7th, I'm going to do a 27 call or a 26 call. I'm going to go at least $1 in the money. So the $1 in the money would be the 27. Let's say we do a $2 in the money call. So if we do a $26 call and we want to get $1 in the money, we're going to add everything on here. And the $26 call is going to be $182, $1.82. The strike price is going to be right here, 26. And then we're going to try to aim to get $1 in the money. So we're thinking that Snapchat's going to get to $27 before August 7th. So here's everything once it adds up. Your price to reach before expiration is going to be your cost of contract plus your strike price. So for example, it's going to be $26 plus $182. That's how we get this $282.82. That's how we get this $280. That's how we get the $28.82. Below, it's going to make... You can see below that it's going to be a 14% move before you get there. And once you do get there, you're only going to make 54% of your original investment. So this play is not going to be a good play since the premiums ran up so much. But let's say Snapchat were to run up $3 in the money. So we were to sell at 27. This is what you'd see then. You'd make 164% on that return of $250 per contract by expiration. This isn't including the time as premium or the intrinsic value. You guys need to understand that. This is just the basic math. Now let's say you want to use this to find a put play. Let's use Snapchat for example again. If we think Snapchat's going to hit $22 by the end of August 3rd, for example, we would buy a $23 or $24 put expiring August 7th or whenever you think it's going to get there by. So let's go ahead and add this up real quick. So Snapchat's at $25.27. We already have that in. Our strike price is going to be $23. So let's go ahead and add that in again. To buy the August 7th $23 put, it's going to cost us $107, so $1.07, and then we're going to try to aim to get at least $1 in the money. So we need Snapchat to get to $21.93 by expiration for our contracts. $2 for the contract. You need this contract to expire $2 or more in the money and make sure that you actually make a profit. If it did expire above the $26 call, $1 or more in the money, even at like 10 cents in the money, as long as it expires over it, you would technically make money. So the key to this is your cost to your option. What you pay for the option is what you get. It's just like buying a car. If you buy the car for cheap and you sell it for more, you make money. If you buy the car for a premium, you lose money. If we're paying $107 for this contract and the contract expires $1 in the money, this contract would only be worth $100. So we'd actually lose $7. So we want to actually expire this $2 in the money. So if we do that, we'd actually make a profit of 186%. We need a 13% drop to get there, and we need it to reach $21.93. All right, so you can see that every dollar you add in the money, your profit goes up. So if we add a $2, we make 186% profit. If we go $3 in the money, we make 280% profit. If we go $10 in the money, which is realistically impossible will make 1,000% profit. Real quick, let's go find another play that we can use this on. So as the last example for this spreadsheet, we're going to cover 1-800-Flowers. We actually hit them at the beginning of February, but let's say right now that we think they're going to go up to maybe $34 by the end of August. So we're going to do an August 21st. Not going to do a $34 call because that's where we think they're going to expire. We're going to do a $32 or $30 call. So let's look at the $32 calls expiring August 21st. Those are sitting at $45 per contract. So let's go and update all this information in the spreadsheet. Flowers is sitting at $26.05, so let's add that right here. Next, we're going to add the strike price, so $23.45, and we want to get at least the $34. Our target profit was $34, so we're going to do $2 in the money. Let's just do one to keep it simple. So we're going to do $1 in the money. If this gets to where we think it's going to go, $27 before expiration, these contracts will expire at 222% profit of original investment. So this will close at $100 per contract. This math really isn't that difficult. As you can see here, we paid $45 per the contract. We're trying to get the contract to expire $1 in the money. In other words, at $100 per contract. So to get there, it's going to be a 28% move. It's going to be a 222% gain on original investment, which would be that $45 turning into $100. But let's say we thought that it was going to make it to the $34. So we do $2 in the money. We're going to make a 444% return on investment, which would be you're expiring $2 in the money, which is going to be $100. So that's $200. You're making $200 from $90 or from $45 originally. And this is just going to help you guys find all your setups. So let's say we were looking to grab a put on them, for example. So Flowers is sitting at $26. We're going to do a, let's say, for example, we thought Flowers was going to go to $20. That was our target profit before August 21st. We'd buy a $22 put expiring August 21st. This contract runs $73 per contract, so we're going to add that in right here, 73. We want to close at least $1 in the money. So we're going to be looking for 136% return before expiration or on expiration if it closes $1 in the money at 30.27. If we can close $2 in the money, we'd be seeing a 273% increase if it gets to 29.27. So let's go back and check out the chart one more time. $73. We need to update the strike price, so it's $23. We can see here that our put information updated, and we can see the drop to get there is going to be 22% drop. Our price to reach before expiration, $2 in the money, we need to get to 20.27. Again, that's going to be a $2 in the money expiration, which would be worth $200. So we paid $73, we're going to get $200 back. That's going to be a 273% increase. Let's say we actually did a 3% in the money. That'd be a 410% increase. Even if we get $1 in the money with this play, you make 36% return. That's not too bad. Hopefully you guys understand this and it's helpful. If you guys need more information on this or want me to explain it better, just drop a comment below, share your thoughts. There's no reason to be scared about sharing your thoughts and commenting. Let's get it done. Let's move forward together. Easy loot, boys. Let's move on to the plays. Alright, so we're going to cover this Google play first. So we are looking for a $1,600 call expiring sometime, I think it was 7/17, so that would be last week. We were looking for an overnight jump. It jumped up to 1574. Hopefully people took profit. Let's see what the profit was. They hit 1900%. These were worth, they were worth 820 the day before. So that's not a bad profit. You make over 200% profit on that. We had this Apple weekly breakout. I'm pretty sure it did something very similar. So we had a quick jump. Yep. We had a $400. Wow. So we had a $395 call at 238. These things were worth $745 the next day. 300%. And now they're coming right back up. So I guess after the week we're going to be looking, or maybe even tomorrow, we're going to be looking to have a $395 breakout and go from there. We're going to see what happens. This looks like it's forming some kind of wedge. So we're just going to keep it on the watch list for the upcoming weeks. Sadly, we had a huge play and a huge setup on Roku that we thought was going to hit, but we totally forgot about Netflix and their earnings. And sadly, that didn't go so well. So Netflix's earnings didn't go well for them, and it took down Roku with them. We saw them come all the way down right here, and Roku has just been moving sideways with Netflix since. Let's check out Netflix real quick. Yeah, Netflix has just been trending up slowly after this huge drop. It's up about 7%, but this drop right here was just ridiculous. 15% all the way at the bottom, but this is what was priced in. yeah, I don't really know if we're gonna play with this anymore. We're gonna keep it on the watch list. But Roku was a bust. The last play we had called out last week would be the NVIDIA options play. We are looking for a 4:30, 4:35 call expiring last Friday, and it jumped the next morning, bounced off this resistance points. You should have taken profit and then sold off super heavy. Sometime this week or next week, we're going to be looking to enter this if it can break out from 426. It's going to be an easy play from 426 to 434, 430. Guaranteed 431. Yeah, that's just a no-brainer. It's only a $5 move, but if you guys play it right, we can make profit off of it. That was a few of the big plays that we took last week. Let's check out some of the plays for this week. All right, real quick though, we're going to check this out. Last week we called these plays out. We had that Twillo call grab on 717. That would be last Friday. Twillo went absolutely nuts today. It would have been a huge, huge, huge play for anyone that took that. You would have got this over here sometime, and then it blew up. So, I don't know. That's easy loot. That's a, what is that? 20% move. So first we're going to be watching UNH, right? UNH has been moving sideways, but this earnings play might provide something. We're going to be looking for some kind of put action if it can break out from this little wedge. Let me show you what I'm looking at real quick. Something like this. Something even more like this. And then something like this. So seeing what we come out from there, we're at like a key level right here too. You can see right here, this has been a key fighting point. Either we're going to soar through here or we're going to just come and tank down all the way to 292. I don't think UNH is going to be a big play for us. I'm going to stay away from it this week. I just thought it would be a nice play coming up. Let's check out Snapchat again real quick. So even though we missed that morning run-up from today, we didn't even miss it. We called it out, but we just didn't call the actual play on it. We're going to be looking to enter probably later sometime next week or even catch the continuation on top of this. I know we probably are going to be paying a premium of at least 30% on top of what we could have paid this morning, but it might be worth it if we can go at least to $27, $28 zone. We're going to pay like $1.80, $182, $184 for a $27, $26 call. So by expiration, I mean, that's going to be like August 7th, but by expiration, that needs to be $2 or $1 in the money for us to actually make a profit. So us getting a position on this is going to be tricky. We're going to wait probably till a down day, hopefully, and then grab a position on that. IBM was going to be a huge play. Today they shot up right after market. We were supposed to be watching them all day. I'm pretty pissed about this. I was supposed to call them out earlier today, but we're looking at that right now. I guess tomorrow we're going to see what happens. Damn, bro, I'm so pissed that we missed this. This was going to be a big play, and I knew it. If we can break out from 136, we're probably going to look to grab some calls on this expiring late August, early September. That's going to give us a nice little edge. Unless we come up into this resistance, we might sell those calls and then grab puts into a nice little position like this. We'll talk about that later on and keep our eye out for it. Then we have Texas Instruments. This was a huge play. Texas Instruments is typically a slow mover, so we're going to see some crazy movement from this coming up in the next few days. We saw a huge breakout right here. So Texas Instrument just broke an all-time high at 135.44. We're going to see some action from this coming up in the earnings, possibly a nice little rip and then a big dump. Something like this, maybe even this. But we're going to keep our eyes out for it. We grabbed some long-term positions in it earlier today. We grabbed the 160 call expiring August 21st at $36 per contract. I'm pretty sure they're sitting at $40, maybe $39 per contract. Texas Instruments is typically a really, really slow mover. So this movement today was a big move. If you didn't get into play today, I would not suggest getting in tomorrow or the next day. We're going to sit and be patient and wait for another down day and move from there. You can definitely get them cheaper than what we paid for today. We paid like a 30, 20, 40% premium on what the contracts were actually worth yesterday. So keep that in mind. You can always grab these contracts cheaper. It's like buying a car. You buy it cheap and you win. Another big play we're going to be looking at is going to be Microsoft. Microsoft had a big week last week. After a nice sell-off, we came down and we found a bottom at this previous resistance. All right, so looking at Microsoft, you can see that this previous resistance turned out to be a support. I'll draw that out right here for you. So as we use these technicals to trade off this, we see that it bounced heavy off this. We missed the huge run up, but we're going to look for the nice breakout into earnings. So let's see right here. We're going to look to enter probably sometime later this week after it breaks through, tests it, and then just starts ripping. We're going to look to grab 220 calls expiring late August. There's nothing more to that. We're just going to keep our eyes on it and watch from there. Last but not least, we have this Boeing setup that we've been watching for nearly a month. This thing has been moving sideways, but we're going to keep watching it, see what happens. There's a big move coming from this soon. We just don't know which direction it's going to go. It's testing a nice support right now, so it might be a good time to enter sometime this week. We're just going to be patient, though. I'd rather miss this play than take it. So I know this watch list was pretty short, but we're just going to knock this one short, and I'm going to grind another video for you guys sometime this week. We're going to cover option terms just to help you new traders get introduced a little bit better and understand more. I'm going to explain options chains so you understand the pricing of options, contracts, expiration, everything like that. It's going to be a really helpful video for the newer traders that are confused and genuinely want to move forward with this. Again, guys, it's been real. Hope you guys enjoyed the second watch list. These next plays we make, we're going to make big money on them. The market makers are going to make us think we're rich for 1 or 2 days, and they're going to take our money right from us. So we need to take profit, not be greedy. There's going to be some contracts that we hold till expiration, but typically we're going to start selling off these contracts once they hit negative and try to save some of our money to grab another play. So guys, I hope you enjoyed the watch list. Next week's watch list is going to contain a little bit more organized version of these plays. There's going to be less risk, intermediate risk, and high risk. The less risk are going to be safer plays for newer members that have less capital to trade with. And the intermediate trades are going to be a riskier trade like a Roku. And then there's going to be a Tesla every week or something like that. We're only going to get these big plays, the big plays every once in a while. We're not going to try to push those too hard until they line up correctly. But yeah, guys, this watch list was short and sweet. We're going to make this week a big one. We're going to ball out, and I'll talk to you guys tomorrow.
Yeah, there's just 1% I want it, she don't see me like it normal. I done keep it going with your friends, I can't be normal. She made me feel like the good, I don't need a promo. Missing to feel like I'm missing out cause I got formal.